Welcome back to another episode. Today we're going to take a closer look at Nvidia and a lot of semiconductor news impacting various companies. We're going to look at AMD, ARM, TSMC, and maybe some other companies that I might kind of think out throughout the video. So let's get started with today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So the first thing we're going to take a closer look at is AMD. AMD was down roughly 4.5%, sitting at $160. And the main reason it seems like AMD stock falls on Morgan Stanley downgrade. And most of the thing is they believe that the AI bar remains high for AMD and is kind of creating a very, very high valuation for the stock. So if we take a closer look at just PE ratio real quick for AMD, I actually have the opposite thought of AMD right now. If we take a closer look at PE ratio forward for this year is 45. So I agree for this year, but forward is the end of this fiscal year, which ends in about 6 months from now. Now forward 1 year, which is the next fiscal year, it drops down to 29. Now, while I believe with this Morgan Stanley, I agree that maybe in the short term right now, the valuation or its PE ratio is pretty extended. I want to say in the long term of things, this is not going to be an Nvidia. Let me just preface with that. I don't believe this is going to be an Nvidia, but I do believe they will be able to grab a nice amount of revenue growth from the AI accelerator market. And for them sitting at that valuation of forward 1 year of 28.9, I think it's actually looking pretty attractive. AMD is my second position, and if those are curious, the difference between my number one and my number two is insane. It's not even close. I would never make AMD kind of the size of my Nvidia position, but I do believe AMD has huge potential, especially at these price points right now. And I just released a video earlier today where I took a closer look at some of the new products AMD announced. So check that out so you can hear my overall thoughts on why I believe the market is maybe underestimating AMD. Again, that just because the market is underestimating AMD, I don't want to make it seem like that's a bearish case for Nvidia. I just think this market is so huge that even Nvidia continuing to dominate, AMD can definitely benefit as well. So Morgan Stanley, we can see from this report, says that they like the AMD story, but investors' expectations for the AI business still seems too high for them. Now, outside of that, we do have another investor or another analyst that adjusted their price target on AMD to 200 from 185.
Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode.
Now, the second thing I want to take a closer look at is ARM. So ARM is doing amazing. We can see the stock is sitting at 139. Year to date, the stock has doubled, right? So congratulations to all ARM holdings. I'm personally on the other spectrum here of ARM, where I do believe this one is a little bit too overvalued compared to the overall excitement. But there's a few things that we have from ARM holdings. The first thing is there were reports that the CEO during the Computex event or during kind of a interview during that time mentions that he believes that ARM will take over 50% of the Windows PC market share by 2029. I think right now, in forms of the PC market, it's very low. The biggest market share of ARM is Apple, who owns about, I believe, somewhere around 10% of the market, and we know Apple has been a big player. Right now, Qualcomm does have an exclusive deal with Microsoft for Windows AI PCs. I don't believe that's going to be the reason where we're going to get 50%. I do believe ARM is going to gain market share here in the PC market, but I don't think it's going to be 50% within the next 5 years. I think that's a little bit hopeful, but let me know in the comments below Do you believe that is actually possible? There are some reports earlier today that ARM and Qualcomm have some legal battles that might be disrupting the AI-powered PC race. That's definitely something to take a closer look at and something to keep a closer eye on for the upcoming days. Next, we're going to jump here into TSMC. So TSMC, another big player here in the semiconductor space. They are the manufacturing giants. The stock year to date has done pretty well, up 65.63%. So TSM, I am personally not a fan of them as a single investment. I would rather own a semiconductor ETF. But obviously there is a lot of excitement for TSMC because they manufacture all the chips that are pretty much in the AI market, like Nvidia's H100, H200, and the list goes on and on. The main thing for me though is TSMC at the end of the day is still a manufacturing company. So if they do raise prices, and that's something we're going to take a closer look at, it's not ever going to be something crazy dramatic in my opinion that can really help this company destroy revenue growth, right? To some, I believe TSMC's revenue projections are always going to be somewhere in line with or very close within the range of what analysts expect. Because, right, they are a manufacturing company, you know their supply chain, you know kind of the products that they can make. It kind of helps investors know and project what this company can do in forms of revenue. So you will never see this company, in my opinion, see massive gains like a company like Nvidia. And like I mentioned, for TSM, instead of kind of having all that stress, I would rather just own an ETF. And just kind of curious, right? TSM was up about 65%. Year to date, SMH up 51%. This is a semiconductor ETF. So obviously TSMC is outperforming this, but not by much as we can see. But TSMC did kind of give some great returns. They give us monthly numbers on forms of revenue. That monthly number was up 30% year over year. Again, probably fueled by a lot of things, especially the inventory correction that's easing in kind of like the smartphone business, in the PC market, and obviously the AI chips within themselves. Now, the other thing I want to take a closer look at TSMC is late last week, we did hear that TSMC is planning on increasing their price for their manufacturing push. And we did hear that NVIDIA CEO Jensen kind of supports this idea. I mean, at the end of the day, this, like I mentioned, for a manufacturing company, you're going to increase the cost. But if you're selling your chips at a high price, it's really not going to do much. And I think that's what Jensen is kind of happy. He's like, hey, look, you're going to raise your prices. We already sell chips at crazy valuations. It's not like you're going to increase the price by 100%. And even if you do, it really won't eat too much on our margins. But what it's going to do is we know that our competitors are not selling their chips at a high price point. So they are actually going to see a nice impact of these price increases. So I think Jensen is actually thinking many steps ahead, or maybe I'm just thinking that Jensen is thinking many steps ahead. You got me there? Because that's how, if I was the CEO of a company and I was like, hey, look, you're going to increase the manufacturing cost of these advanced chips, go for it. I already sell my chips at crazy price hikes. My competitors like AMD, like Intel, sell their AI chips pretty much at some form of value, nowhere near my price point. So I know that a price hike will impact them more than it would impact me. And this is actually what this reporter was mentioning, that they don't believe that Nvidia will really take much of a hit here in forms of gross margins, but other companies like Apple, AMD, and Qualcomm, who don't have that huge price increase or premium on their chips, might actually see some impact on gross margins. Another great thing about this article that I think was important is TSMC, we are seeing updates that their CoWoS monthly capacity could reach around 45,000 to 50,000 wafers by the end of this year on a monthly basis. That is the advanced packaging that Nvidia uses for their H100 and H200, and the Blackwell solutions as well. Now the other one, SOIC, This is only expected to be around 5,000 to 6,000 wafers by the end of the year. So we can see the difference between CoWoS and SOIC is a huge difference, by marginal, almost a 10x different. And for those that are not familiar, SOIC is the advanced packaging that AMD uses. So we can definitely see why AMD, even this year, won't really see much of that revenue growth like Nvidia, because in forms of production, they can't even match to the level of Nvidia right now. So that's pretty much all I have for today's episode. I hope you guys enjoyed it. Let me know what are your thoughts on AMD. Let me know what are your thoughts on TSMC. Do you think I'm overthinking what Jensen is thinking about that multiple steps ahead? Or do you think I might be in his brain right now? Let me know in the comments below, and peace out.